Hey guys, welcome back. Today we have another great Spac stock for you with a lot of upside potential that you may want to buy now. Of course, remember this is a Spac stock, so it is considered a speculative investment. And lastly, full disclaimer, this is just my opinion and not financial advice, so please do your own further research. With that said, let's get into it. Today's Spac is FinServ Acquisition Corp, FSRV. This one is a bit different from our typical Spac strategies to make money. If you haven't watched it yet, check out our video above on how to trade Spac stocks. As you recall, we usually don't buy Spac stocks after it has made a deal announcement. We usually sell because the price has gone up. But this one is a bit different, and let me explain why. Here, FinServ just made an announcement a few weeks ago to acquire Catapult. The stock was trading at around $10.50 and then it jumped to $15 upon the announcement. However, over the past few weeks, it has slowly gone down and is now trading around $12.50. Thus, investors must not like this deal, or it could be that the hedge funds have cashed out, which is typically what they do, and the selling pressure pushed the price down. This is quite normal even if the deal is good. I've seen this happen to DraftKings when it first announced and the Spac popped $20. Then it dropped to as low as $15. After the merger, it went back up to $20 and is now trading at around $50. So we can't assume it is a bad deal, and we must look deeper into Catapult's business to determine if there is a buy opportunity here. So first, Catapult is a fintech company that offers a point-of-sale, lease-to-own financing option for non-prime consumers, i.e. those consumers who are between prime and subprime with a credit scores of between 600 and 700. Basically, if you remember in the 90s, there were a lot of rent-to-own furniture and appliance shops. Well, Catapult does basically the same thing, but for the modern age using technology and focusing on e-commerce sales, all without predatory lending tactics. For example, a customer shopping online with a merchant who uses Catapult's platform can lease to own a high-ticket item up to $3,000 and make monthly payment based on their own schedule. There is no credit score checking required, it takes only 5 seconds for approval, and there are no late fees ever. In comparing Catapult's plan with other competitors including credit cards, Catapult's payment plan is cheaper by 30%. Hence, it offers a really great service to consumers who don't necessarily have the money up front for big ticket items, especially during COVID and high unemployment. It is a lot easier to pay $100 per month than $1,000 up front. For merchants, this is also a great service as it makes it easier to promote and sell high-priced products. Catapult is shown to boost sales and also increase repeat sales by 45%. Additionally, the platform is very easy to integrate with any merchant website. Catapult is currently in partnership with over 150 plus merchants, including large names like Wayfair, Lenovo, and partners such as Shopify and BigCommerce. In looking at the opportunity, the consumer spending e-commerce market is expected to grow from $180 billion today to $300 billion by 2023. Of that, the market for underserved consumers who needs financing option is worth up to $50 billion. Catapult currently has just captured less than 1% of this total market, and thus there's a huge opportunity for growth. In looking at Catapult's business performance, we see that they have done very well. For 2020, they expect to have over $250 million in revenue, which is a growth of 171% year over year. They are profitable and expect to end the year with $27 million in net profit, which is roughly a 10% profit margin. For 2021, they are estimating to grow at 82% and grow profits by 74%. I expect they will grow even faster as COVID has shifted a lot of consumer spending online. As for valuation, Catapult is trading at only 14.1 times 2021 EV to EBITDA and only 2.2 times 2021 EV to sales. They are clearly undervalued when compared to their competitors such as PayPal or Afterpay, who is trading at 35 to 50 times EV to EBITDA multiples. Catapult is also expected to grow around 80%, which is way faster than all the competitors. Hence, at 14 times EV to EBITDA with an expected growth rate of 80%, this seems to be quite a good bargain. In looking at the technical charts to determine a good buy price, we see that FinServ has a lot of resistance and selling pressure at $15. However, it seems to have support at $12.50. I would buy here now and even more if it drops lower to the next support at $10.50. But we know it would never drop to $10 because that is the IPO redemption price. Thus, your downside risk is limited to $10, but your upside potential could be $20+. Hence, the risk to reward ratio is very attractive at these levels, and I will definitely start buying tomorrow. For those that watched this far, I have a special bonus stock idea for you. Curo Group Holdings, ticker CURO. Curo is also in the business of consumer financing for underbanked customers, including loans, check cashing, money transfers, etc. But what is interesting is that Curo stock recently jumped from $9 to $18 upon the news that FinServ was acquiring Catapult. The reason is because Curo owns 40% of Catapult. Thus, this deal will allow Curo to cash in and gain $125 million in cash and still retain 21% of Catapult after the merger is finalized. Considering that Curo has only a market cap of $300 million prior to this news, it made sense for the stock to jump over 100%. However, recently, the stock has sold off a bit and is now trading at $14.33. At this price, this could be a good play on Catapult stock as well. If we believe that Catapult is worth a lot more than its current price and that the stock will go higher, then Curo stock should also go higher. Additionally, Curo itself is a pretty good company that has close to $1 billion in revenue and makes over $100 million in net income. It was also hit hard by COVID and sales are down close to 40%. However, they were still able to make money, and I expect that they should do even better post-pandemic. Thus, Curo seems to be a good value both as a post-pandemic play and also as a Catapult play. In looking at the technical charts, we see that Curo has a lot of resistance and selling pressure at $21. However, it seems to be trading in a range with support at $14. I would look to buy some here and dollar cost average down if it drops back down to $10. Though I don't expect this to happen given the large investment gain from the Catapult deal. Overall, the risk to reward ratio is quite good in this stock and I would look to buy some tomorrow. That's all for today. Thanks again for watching, and as always, this is just my opinion, so please do your own further research. Happy trading, and please don't forget to subscribe.